Good morning and welcome back to Profit Path. It's me. Markets just had a week to remember, setting new records, but now investors are pulling back and locking in gains. Meanwhile, AI stocks and IPOs are still getting attention. If you're new here, hit subscribe for clean, daily market breakdowns. Alright, let's start today with capital flows and market sentiment. US equity funds saw $10.44 billion in weekly outflows, the largest in 5 weeks. Big cap funds took the biggest hit, followed by mid and small caps. At the same time, bond funds and money market funds were beneficiaries. In other words, investors are shifting towards safer assets. Why? Well, Reuters says investors are growing wary of lofty valuations and geopolitical risks. Let's take a look at the big cap funds. For example, investors pulled a net $6.6 billion from stock funds focused on large companies. Why? Well, these funds had posted strong returns this year, gaining an average of 16.9% through June, which may have made investors feel like they already had a good run and it's time to lock in those gains. This flight to safety is also evident when we look at the type of stocks investors are buying. Since July, they've been pouring money into bond funds at a net $8.8 billion pace, the highest since November of last year. So the combination of strong returns and geopolitical uncertainty is leading investors to shift from stocks to bonds and money market instruments, which are less volatile and offer higher yields than before. So what does this mean? Well, it means that even though the market is hitting record highs, investor sentiment is starting to change. They're taking profits and becoming more cautious about the future. I often say that markets are forward-looking, and this shift in sentiment is a sign that investors are already anticipating potential challenges ahead. Speaking of challenges, let's talk about the recent earnings reports. You see, last quarter, companies handily beat estimates. This was driven mainly by cost-cutting and strong demand for AI-related products. But the problem is that these strong results were already priced in by the market, so there wasn't much room left for upside surprises. And now that reality has set in, investors are looking ahead to the next round of earnings, which will likely be much more difficult to beat. In fact, the bar is so high now that even if companies match expectations, it would be considered a miss. Here's why. Bank of America points out that S&P 500 companies are expected to see their year-over-year profit growth slow to 5% in the third quarter, down from over 10% in the second quarter. So basically, the market is now in a wait-and-see mode. It's digesting the recent rally and digesting the latest earnings report. Okay, let's move on and talk about this week's breakout IPO. Astera Labs, ALAB, a provider of AI training infrastructure, went public on June and is featured as this week's breakout stock because it delivered better than expected quarterly results. Shares are up nearly 100% from its IPO price. Other notable gainers this week include Investors and Micron Technology. Both stocks took advantage of the 10-year Treasury yield falling to around 3.7%, the lowest since February 2023. Now you might be thinking, what's the big deal about this? Well, lower bond yields make stocks with long-term growth potential more attractive because it reduces the cost of borrowing for these companies, so it's easier for them to invest in growth initiatives like research and development, hiring, marketing, etc. That was the case for both Investors and Micron. Plus, the entire AI semiconductor industry is benefiting from strong demand driven by the rapid advancements in AI technology. However, it looks like the market is starting to price in all this good news already. So like I mentioned earlier, the market is now in a wait-and-see mode. Now what should you be watching for next week? Well, all eyes are on the Fed meeting. Markets are pricing in a 25 basis point rate cut next week, with some chance of a larger 50 basis point cut. Now, if the Fed actually delivers a larger cut, this would be positive for risk assets like stocks and crypto, because it would signal that the central bank is more confident about the economy's resilience. However, if the Fed sticks to a 25 basis point cut, or if they sound too cautious about the economy, this could disappoint the market and cause a sell-off. So that's something to keep an eye on. Also, the jobs report on Friday will provide clues about the strength of the labor market. Strong job growth could reinforce the Fed's cautious approach, which means that a rate cut is unlikely or at least smaller than expected. All right, to wrap up, record highs are holding, but investors are becoming more cautious. Profits are being taken and flows are shifting. So my question to you is this: which trend do you think is stronger? AI, tech, momentum, or the pullback due to valuation risk? Drop your view below. And if you liked this update, hit subscribe to stay ahead.